The dividend yield is a fundamental metric that measures the annual dividend payment a company makes to its shareholders as a percentage of the current stock price. It is calculated by dividing the annual dividends per share by the current market price per share and multiplying the result by 100 to express it as a percentage. This metric is particularly important for investors who prioritize income, as it helps them evaluate the return on their investment provided solely by dividends, independent of stock price fluctuations. The dividend yield is an essential tool for assessing a company's attractiveness to income-focused investors. A higher dividend yield can indicate that a company consistently rewards its shareholders with generous payouts, making it appealing to those seeking regular income. However, an unusually high yield can sometimes signal potential risks, such as financial instability or an unsustainable dividend policy. Conversely, a lower dividend yield may suggest that a company is reinvesting its profits into growth opportunities, which can attract investors looking for long-term capital appreciation. A good dividend yield generally depends on the industry and market conditions, but as a rule of thumb, a yield between 2% and 6% is often considered attractive. Yields below 2% might be too low to justify an income-focused investment unless the company shows strong growth potential, while yields above 6% could indicate potential risks or an unsustainable payout. Comparing a company's dividend yield to its historical averages, industry peers, and the broader market is crucial for determining whether it offers a fair balance between income and risk. This metric also plays a crucial role in estimating the fair value of a company. By comparing a company's current dividend yield to its historical average or industry benchmarks, investors can determine whether the stock is undervalued, fairly valued, or overvalued. For instance, if the current dividend yield is significantly higher than its historical average and the company's dividend payments remain stable, it may suggest that the stock price is undervalued, presenting a potential investment opportunity. The Dividend Yield Calculator, https://www.fairvaluecalculator.com and Dividend Yield Online Calculator, is a highly useful tool for investors. By simply entering the annual dividend per share and the current stock price, the calculator provides an instant and accurate dividend yield. This makes it an indispensable resource for evaluating individual stocks and making informed decisions about potential investments. For those seeking to analyze dividend yields on a larger scale, the premium tools available on fairvaluecalculator.com provide a significant advantage. These tools automatically calculate the dividend yield for over 45,000 stocks worldwide, eliminating the need for manual data entry and saving time. Investors can quickly compare dividend yields across different companies, industries, and regions, allowing for more efficient identification of high-yield stocks and undervalued opportunities. Whether you are an income-focused investor or someone integrating dividend yield into your valuation process, this metric is a crucial part of any investment strategy. By using the Dividend Yield Calculator or leveraging the premium tools for automated analysis, you can make smarter, faster, and more informed investment decisions while gaining a competitive edge in identifying the best global dividend-paying stocks.